Hello. So welcome to Test 2 Review for Law for Accountants, Accounting 445. This is the material for Testlet 2. Remember, this test you will be taking on Canvas. Once you open the test, you have 75 minutes to complete it. It will cover professional and legal responsibilities, securities regulation, and business structures. There will be 50 questions. One question has several different parts, 4 different parts, and it actually is a simulation, and it deals with partnerships. So here's how you should study for this test. Review all the Testlet 2 slides, paying particular attention to the questions that we covered in class. Look at the questions that are included in this review PowerPoint, and again, pay very close attention to the questions that are part of this review. So with that much in mind, let's go ahead and get started with the review. Oh, by the way, I just took a class and I learned that a video should never be over 10 minutes long. This will be slightly over 10 minutes long, and so I will not cover the sample questions in here, but I want you to look at them. And this PowerPoint is on Canvas, and it's called the YouTube Testlet 2 PowerPoint. So I want you to go ahead and look at that. All right, so regulation of the profession. You have to know everything on these slides that I have underlined and bolded. I guarantee those will be questions on the test. License to practice is issued by state boards. And also you're going to have to be able to identify that the Public Company Accounting Oversight Board was a board that was established by Sarbanes-Oxley. ACCT, Code of Professional Responsibility. A member may be expelled without a hearing for all of these reasons, and you're going to have to be able to identify when a member could be expelled. So you also are going to have to know what are the possible sanctions. So admonishment, corrective action, suspension, and expulsion are probable sanctions for a violation of your Code of Professional Conduct. Here are the sample questions. So look at 1, 3, and 4, regulation of the profession. We also talked a little bit about common law liability, and that's based on case law. We spoke about breach of contract, negligence, and fraud. Confidential versus privileged communications. Remember that with an accountant, there's no such thing as a privileged communication between an accountant and their client under the common law or under federal law. The only way a privileged communication exists between clients and accountants is if there is a state statute that applies and the communication must be intended to be privileged. Liability for fraud. So you're going to have to know what the elements of fraud are. An intentional misstatement of a material fact, that's scienter. Justifiable reliance thereon to the detriment of the relying party. Punitive damages may be available. Scienter or intent to deceive may be satisfied if there is reckless disregard for the truth. We call this constructive fraud. You're going to need to know that. Working papers. So absent an agreement to the contrary, working papers, notes, computations are owned by the accountant. If a valid subpoena is issued by a court, the papers must be produced. If there's not a valid subpoena, or if there's not the client's consent, the papers do not have to be produced. So to which of the following parties may a CPA partnership provide its working papers without either the client's consent or a lawful subpoena? Neither the IRS nor FASB. Questions, look at 35 and 36. Again, privileged communications, there's no such thing as a privileged communication unless there is a state statute. Confidential client data. Take a look at this question, question 42. Again, refusal to testify. For an accountant legally to refuse to testify in court, you must have a state law that recognizes accountant-client communication as privileged. The communication must be intended as confidential, and no consent to testify must be granted by the client. All right, so in terms of accountant and client, look at questions 39 and 40. Sources of accountants' criminal liability. There's several, right? So the Securities Act of 1933 and 34 Those are big sources of liability and potential criminal liability as well as civil liability. The Internal Revenue Code may impose criminal sanctions as well for willful preparation of a false return or for tax evasion. And of course, RICO, the Racketeer Influenced Corrupt Organizations Act, you could face criminal penalties for that. And these include several felonies: fraud, money laundering, violations of securities laws, and there are also civil penalties under this law as well. A pattern of racketeering can be shown by 2 illegal acts within 10 years. Note that if you are sued for a tort or for negligence, this is not criminal, this is civil, okay? So you'll see a question on the exam that requires you to identify which of the following is not a source of criminal liability, and tort law or negligence is not. That's civil. Purpose of the Securities Act is not to rank or not to rate securities. It's to give full and fair disclosure. Another purpose is to prohibit unfair, deceptive, and manipulative practices. Here's some easy questions for you to get right. A preliminary prospectus is called a red herring prospectus. A tombstone ad simply makes known the availability of a prospectus. And remember, it's called a tombstone ad because it has a black border around it. So go ahead and look at question 4. How does the Securities Act of '33 affect investors? The 1934 Act applies to the secondary securities market. And the plaintiff may sue based on virtually any false statement that's made. There are reporting requirements under this act as well, and the reporting requirements apply to companies that are simply listed on a national exchange. If the company's not listed on a national exchange, but it has assets of $10 million or more and 500 or more shareholders, then the reporting requirements apply to that company as well. There are also anti-fraud provisions applicable, and these are applicable to all securities, whether they're on the listed on a national exchange or not. Section 10, that's fraud. The anti-fraud provisions, again, it covers all securities. You need to remember that. There is no statute of limitations. And scienter must be present. That's intent to deceive, manipulate, or defraud. And remember, constructive fraud is where an accountant is grossly negligent. Anti-fraud provisions, take a look at question 28 and 34. Reporting requirements under the Securities Exchange Act of 1934, look at questions 30 and 36, 31 and 32. And of course, the Private Securities Litigation Reform Act, there will be at least one, perhaps 2 questions that require you to know about this act. This amends the 33 and 34 acts. If an auditor detects illegal activity, the audit committee or the board of directors must be immediately notified. You will see that in the form of a multiple choice question. Private Securities Litigation Reform Act, here's your question. 48. Sarbanes-Oxley. I believe there are 4, maybe 5 questions about Sarbanes-Oxley on the test. Just the basics. It requires retention of audit and review papers for at least 5 years, possibly 7. The destruction of these documents to impede an investigation is a criminal act. The CFO and the CEO must certify financial reports, and there are significant penalties for making false statements. And officers are responsible for maintaining effective internal controls. There must be disclosure of all significant internal control deficiencies to an auditor and the audit committee. Sarbanes-Oxley also created the Public Company Accounting Oversight Board, PCAOB, and that's on the test, so easy points for you. More questions, Sarbanes-Oxley questions, 51 and 52. 53 and 54. 43 and 56. And finally, let's get to forms of business organizations, and we're almost done. A sole proprietorship is a creature of common law. There are no filings required. It has lots of advantages. There are no organizational fees. You make all the decisions yourself. There's no double taxation. Probably the biggest disadvantage is unlimited personal liability. General partnership is also a creature of common law. It's where two or more people carry on a business as co-owners for profit. It can be created by conduct or by estoppel. Be careful when combining control and management and a share of the profits, because you could be creating a partnership by estoppel. It's a common law entity. A written agreement is not required. However, if the partnership cannot be completed within a year, then there must be a written partnership agreement. Here's a question from the Revised Uniform Partnership Act. Remember, you must have unanimous consent if you're making the partnership a surety or to admit a new partner. More partnership questions, 2 and 5. And remember, there will be one multi-part question that's a simulation regarding partnerships. Owning property, a partnership may own property in the partnership name. And how do you know whether an asset belongs to the partnership or it's an individual asset? Well, here are some of the elements that you would look at. And there will be one question about owning property as a partnership. Question 16, take a look at that, partnership property. Management of a partnership. You know, as a rule, if you don't have a written partnership agreement, you're going to be sharing profits and losses equally. However, in a partnership, must you share profits equally? No, absolutely not. And you could agree on sharing profits in a different manner. There's no implied right to a salary. You must have a written partnership agreement if you're going to have a salary. There is the right on the part of the partners to inspect the books. It's a fiduciary relationship, and in terms of decision making, ordinary business decisions require a majority, but a unanimous vote is required for the sale of goodwill, submitting a partnership claim to arbitration, or admission of a new partner, or confession of judgment, or making a partnership a surety. Assignment of a partner's interest. Remember that assignment does not dissolve a partnership, and the assignee does not become a partner. Here's some more partnership questions you should look at, 6, 7, and 8. You may see a couple of these on the test. 12 and 13, yes indeed you will see. And then limited partnerships. And the law that governs limited partnerships is the Revised Uniform Limited Partnership Act. As the note at the bottom of the slide indicates, please remember to pay special attention to the items that are highlighted. So remember that to create a limited partnership, you must have at least one general partner and one limited partner. And death of a partner does not terminate the limited partnership. And if the agreement is silent, profits and losses are shared in proportion to capital contributions. This is very different from a general partnership. Here's your question about how are you going to split profits. Question 20, take a look at that one. Limited liability companies are creature of state statutes, and so there are 50 different statutes. They look an awful lot alike. Limited liability companies do not have perpetual existence. Most of the statutes say that they last for 30 years. Limited liability partnerships, that's another form of business, a hybrid form of business. It's not available in all states. Take a look generally at some of the requirements. Corporations, the biggest advantages of the corporate form of business include limited liability, ease of transfer of ownership. You just sell your shares of stock to the new owner, and perpetual existence. Also, remember piercing the corporate veil. So limited liability can be lost if a corporate veil is pierced. Corporate veils are pierced if a corporation is formed to perpetrate a fraud on creditors. Oftentimes, corporations have their veil pierced if shareholders have commingled personal funds with corporate funds and assets. Note that is underlined, so that's probably on the test. Here's a pierce the corporate veil question. It's question 89. Formation of a corporation. Take a look at questions 53 and 54. So what do you have to provide? Power of the board of directors. Take a look at question 55. Liabilities, be sure to take a look at question 72. Directors and officers, look at question 78. Stockholder rights, question 95. And that's it. So good luck studying for this exam, and good luck studying for this exam. And remember to look at all of the questions we went over in class. But if you focus on this lecture today and these questions, you'll get a head start. Anyway, thank you so much.